How can teens build a good credit score? Imagine being able to borrow money easily when you need it in the future. Building a good credit score is like earning a trust badge with lenders. It shows you are responsible with money and can pay back what you owe. A credit score is a number that tells banks and lenders how trustworthy you are when borrowing money. It affects your chances of getting loans, credit cards, or even renting an apartment later on. First, it's important to understand what credit really is. Credit means borrowing money or using a credit card to buy things now and paying for them later. When you borrow, you agree to pay back the money, usually with extra called interest. Your credit score depends on how well you handle this borrowing. One way to start is by paying bills on time. Whether it's a cell phone bill or a small credit card payment, paying on time helps your score grow. Missing payments can hurt your credit and make it harder to borrow money later. Keep track of due dates so you don't forget. Another key part is credit utilization. This means how much of your available credit you are using. If you have a credit card with a limit of $1,000, try to keep your balance below $300. Using less than 30% of your limit shows you're not overspending and helps your score stay healthy. Having different types of credit can also help. For example, a credit card and a small loan show lenders you can handle different kinds of borrowing. But don't open too many accounts at once. Applying for many credit cards or loans in a short time can lower your score because it looks like you might be desperate for money. A smart step for teens is becoming an authorized user on a parent's credit card. This means you get a card linked to their account, and if they pay on time, it helps build your credit history. But remember, if you or your parent misuse the card, it can hurt both of your scores. Another option is applying for a secured credit card. This type of card needs a cash deposit that becomes your credit limit. For example, if you deposit $200, that's your limit. Using this card for small purchases and paying the full balance each month shows you can handle credit responsibly. Checking your credit report regularly is also important. You can do this for free once a year from the main credit bureaus. Look for any mistakes or signs of identity theft. Monitoring your report helps you see how your actions affect your score and keeps you in control. Avoid opening many new accounts at once because it can make you seem risky to lenders. Also, don't borrow money for things you can't pay back quickly. Being responsible with small steps now sets you up for better financial options later. Starting early and practicing good habits like paying bills on time, keeping balances low, and understanding credit terms will help you build a strong credit score. Good credit can make it easier to get loans, rent an apartment, or buy a car with lower interest rates. Learning about credit now helps you develop smart money skills that will benefit you for years to come.